I sure hope you guys are ready. We have another jam-packed week coming up for stocks. We have to break down the charts here on the S&P, the NASDAQ, and go over 5 companies, 5 stocks I'm watching, all of which are reporting earnings this week. We're going to break down the estimates for EPS, revenue, what I'm doing with these stocks, and of course, we'll break down the charts. But first, guys, hit that like button. Make sure to subscribe, follow along for more content. And with that being said, guys, cheers. Take a sip of your coffee. That's also very important. And let's dive into it. So at this point, you guys know the stock market did very well. On Friday, we had a great bounce back day for the first time in a couple of days, it seems like. It honestly seems like weeks, right? But we had a great bounce back day. The S&P went up over 2%. QQQ went up almost 2.5%, guys. Same with the Russell, and the Dow went up over 1.6%. So yeah, we had a great day for stocks, and you guys can see on this 5-day, 5-minute chart on SPY, we're approaching a big resistance. We're pretty much at it at about $565 per share. That's where we failed to break out of on Friday and all of last week for that matter, right? We hit that point multiple times and we got rejected. So we're trading sideways on SPY based on this 5-day, 5-minute, and I'm pretty sure QQQ is looking pretty similar. Yeah, QQQ is trading sideways. We have resistance at about 480 on this one, which QQQ tracks the NASDAQ 100 for those that don't know or didn't know. So this is an ideal spot that the bulls need to break. It's the level that needs to break this week for there to be more upside in these indexes because, guys, at the end of the day, we're not fully breaking out yet. We're not. Here on the 1-hour time frame, you can see we're still under the 180 SMA on QQQ, and same thing on SPY. You guys see it right here. We're under this 180 SMA. So for us to see any breakout, not only do we have to break out of that resistance on the 5-day, 5-minute, being about 565 here on SPY, but we also have to take out this moving average, which we haven't done either of those yet, right? Same thing on QQQ. We have to break out of 480. We have to break out of this 180 moving average. And if we do, all right, that's when we'll start to break out, maybe see more momentum. But I wouldn't get too excited yet. You know, we had a great green day. It's awesome. Sunshine and rainbows, right? Some people are seeing sunshine and rainbows right now. But the reality is, man, we're not out of the woods yet. So be patient. This week, we'll get more direction. And of course, we'll do more updates. So make sure to subscribe, follow along for more. This is going to be interesting to say the least. So let me show you now some stocks I'm watching. We have 5 in particular. As earnings season's still going, guys, these aren't the most exciting companies, let's just say that. A lot of them have already reported earnings, but these are some still worth watching. Number 1 here that I want to go over is Nike, ticker symbol NKE, which got a lot of hype recently. They got a new CEO, right, in the last couple of months. We got the news of them doing the Skims collab with Kim Kardashian. That sent the stock higher, but like it has over the last couple of months, every time it breaks out, over 75, 80 bucks, it seems like it always finds its way back to the low 70s, and here we are again. I mean, literally every time we've done that over the last couple of months, it's been a fake out. Every time we've broken out of 75, 80. I mean, look for yourselves here, guys. We hit 80 bucks back in December. We got back to 68. We broke out to 80 bucks pretty much about a month and a half ago, end of January. Then we got back to 68. We then broke back to $82 about 2-3 weeks ago, and well, we're back to 70 bucks. So this stock has just been getting destroyed, and the reality is it has to show us that the numbers are getting better. That's what investors are waiting for. That's what traders are waiting for. We need to get a legit catalyst here, and proof in the earnings that guidance is strong, numbers are getting better, and the company is slowly turning things around, because the reality is they're not looking great, guys. They're not looking great. EPS, the estimate is 27 cents for the quarter they're about to report for versus 77 cents in the same quarter last year. Yeah, that's not good, right? And revenue estimate, $11.01 billion versus $12.43 billion last year. That's down 11% year over year. So revenue's getting squashed. EPS is getting squashed, and it's got to get better for the company, right? Innovation's lacking, competition's up. They went direct to consumer, which kind of screwed up their business a little bit. Now they're, kind of going back on that, right? Going more the Foot Locker route, the other routes that they used to go, right? So it's been tough for Nike. It's been tough for Nike for sure. And I mean, you notice it when you're shopping for shoes, right? There's so many other options these days. You got Hoka, you got, what's the other one? Brooks, you got On Cloud. They're making a big dent, putting a huge dent into Nike right now, On Cloud especially. Funny enough, my wife, we just went to Dick's Sporting Goods a couple of days ago, and we tried, I didn't buy shoes, but she tried on the Hokas, the Brooks, and a pair of Nikes, and she actually got the Nike ones. Those were my recommendation. I was like, these look kind of nice. They look comfortable, and she actually liked the Nike ones more than Hoka and Brooks. That's just our experience, one person here, but hey, maybe Nike's slowly turning things around. I mean, obviously, they've always had great shoes, but the competition is fierce, right? That's the point, and it's going to be interesting, man. Earnings have to be good, strong. Guidance needs to be good as well for this to rebound. And earnings are on the 20th, so what's that? On Thursday after the bell, I believe. And we're at a multi-month low right now, or approaching a multi-month low, especially if we take out $70 to $68. So this is a spot that the bulls need to hold. But it all comes down to earnings, man. And I personally do not own the stock right now. I did for about a month or two. I bought it, in the last year. Then I rethought my investment. I'm like, why am I in the stock? I sold out of it. Thank God I did, because it's only been down since, and flat since, quite frankly. I think I bought it in the 70s, literally. And I was like, what am I doing? Let me get out of this thing. And, I'm going to wait until the business actually starts turning things around before I even consider buying the stock. But keep your eyes on Nike. FedEx is another one, FDX, which I'm sure you guys saw. UPS, didn't they collapse after earnings? Let me pull this up quickly. UPS is their competitor, obviously. Yeah, UPS tanked, guys, from $138 a share all the way to $109. It dropped 20%. Think about that, guys, 20%. And now FedEx is about to report, and I'm nervous for this company. I mean, obviously, it dropped a lot after the UPS earnings, and it's been down since. It's pretty much at a 4-hour. It's at a low on the 4-hour chart, probably at a year low. We're at a low on the year chart, and on the 3-year chart, we're still up a lot off the lows. But are earnings going to be terrible enough to push it even lower? Or is the bad news already priced in, considering UPS sent the stock even lower, right? I don't know. But EPS is projected at $4.64 for FedEx versus $3.86 from last year on revenue of $28.89 billion versus $21.74 billion last year. Pretty much flat, up to around 1% revenue growth year over year. And it's not ideal, man. The chart is not looking ideal. Numbers are not looking great for the company. And honestly, I'm not a big fan of investing in a UPS and a FedEx. Not that they can't bounce back. I just think there's other opportunities out there that are better. But hey, we'll see how they look after earnings. never say never, guys. They're on the 20th, so on Thursday after the bell, we're getting FedEx. And we also have NIO this week, Chinese EV maker. Do you guys remember NIO? NIO is at about $4.90 per share right now, and the stock's actually starting to reverse. Do you see here we had a period of time, months on end here, where we were flat, slightly downtrending. Now we're starting to break back out. We have a golden cross. We just took out the highs from the end of February with the move we saw just a couple of days ago. And it kind of looks like we have a cup and handle here in the making on the 4-hour chart heading into earnings on Friday, right? Yeah, that's Friday the 21st. So NIO looks pretty good on the charts, guys. Pretty good on the charts for a reversal. But with earnings coming up, who knows what's going to happen? And full disclosure, guys, I don't own any of these stocks, and I'm not a big fan of gambling on earnings, right? Buying stocks before earnings and hoping they go up, or shorting stocks before earnings and hoping they go down. I've done that before. I've made money, but I've also lost money. So it's not the best strategy. I'd rather wait and see what numbers look like before buying into a stock around earnings season, especially as a trade, right? So NIO is projecting a loss of $2.36 per share versus the loss of $2.81 from last year. So that's getting better, but they're obviously still losing money. And revenue, $20.19 billion versus $17.1 billion from last year. They're expected to grow about 18% year over year. Not too bad. And if they crush earnings, man, they might pop over $5 a share. Totally possible. The stock's still beating up. We hit almost $8 back in October. We're starting to reverse here, but it all comes down to earnings. So that's NIO. And before we break down these other two stocks, the last two stocks, get your 30 stocks from Moomoo while the deal lasts. Go to stacerfest.com/Moomoo or use that link down below. Once you open up your account and deposit at least $100, you get 5 stocks. Deposit at least $2,000. Get this, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY, and the deal is running out in 2 weeks, guys. So get on it. Go to stacerfest.com/Moomoo or check out the link down below. Get your stocks. And now let's break down the last 2 stocks for this video, which the first one here is Micron, they're looking great. Their numbers versus last year, although the stock has been flat for months. You guys can see, wait a second. Holy smokes, I just realized this stock has been flat for a while. It's been trading sideways here pretty predictably between $85 to about $115. You guys see it's hit 85 like 8 times over the last couple of months, and we topped out at about 113 to 115 many times as well. So at this point, guys, Micron is building momentum heading into earnings. The stock is up from 85 now to $100 a share. Earnings are coming up on the 20th, which is on Thursday after the bell, and it went up 6% on Friday, guys. So let's see if this momentum continues. EPS, listen to this, is projected at $1.43 versus 42 cents from last year on revenue of $7.92 billion versus $5.82 billion from last year. That's up 36% year over year. Very good, very good, if you ask me, guys. And we'll see how guidance looks, what management has to say. Maybe eventually, it's trending towards 110, 115 again. Maybe this level breaks. Time will tell. I'll set my alert at $110 per share. I'll do another one at $115 per share. Let me do that right now. And let's pop up this 3-year chart quickly to see kind of how we're looking. So if we actually take out 110 to 15, this could have legs to $130. Maybe if that breaks, 140 to 150, but baby steps, guys. Let's take it easy. Let's see what we do here at 110 to 115 first. So that's Micron. And last but not least, we have Carnival Cruise Line, ticker symbol CCL. This one's down like $10 a share, about 30% from highs here. We're completely collapsing. No doubt. The chart does not look good here on CCL. We have a death cross, but this one, excuse me, guys. Man, I might need some water. This one tends to move around earnings. It tends to move. And with it being very beaten up right now, we also have a bullish divergence. It might be one that rebounds depending on how earnings look. They're on Friday in the morning, and EPS is projected at 2 cents for CCL versus the loss of 14 cents from last year on revenue of 5.74 to, let's see, versus 5.41 billion. So that would be up about 6%. They're expected to grow revenue by about 6% year over year. And the chart looks pretty good, if you ask me. On the 1 year, it looks like the trend's holding, right? Still not reversing, obviously. We're not confirming the bounce, but we did have a 4% green day on Friday. And on the 3-year chart, we're looking great as well. This really looks like a healthy pullback and potentially an entry point for a swing trade, maybe a longer-term trade, 3, 6, 9 months. It kind of looks good. I'm not going to lie, man. This looks really good. And out of all these stocks, right, I'm not a big fan of trading around earnings, but depending on how they look after earnings, out of all these stocks, this one might be my favorite one, right? CCL, if it's able to confirm the break back over, let's say, $20, $21 a share, things could get interesting. Let's just say that. So that's it for the video, guys. Those are 5 stocks I'm watching: Nike, FedEx, Neo, Micron, and CCL. Let me know what you guys think in the comments. Hit that like button. Make sure to subscribe. Follow along for more content. I appreciate you guys as always. And with that being said, cheers. I'll catch you in the next video.